Hi, this is Jimmy Devereaux with the Spotlight team at Keller Williams Realty in beautiful Tyler, Texas. I'm going to spend a few minutes today going through the Spotlight market snapshot for August 2010. And when we look at the numbers that drive real estate, the most recent August numbers for home sales still show that we're in a downward trend. August sales were about 15% lower than August 2009 sales and about 6.6% less than last month, July 2010. Now, if you compare the same 12-month period a year ago, which was September of '08 through August of '09 versus '09 through 10 of the same months, the cumulative home sales through August were actually about 6.5% higher. What we're finding, though, is that that's probably because of the homebuyer tax credit, because through May of 2010, each of the month's sales were trending higher than the same month of the prior year. So it was kind of suggesting an improving market. Since then, however, in the most recent months from June forward, they've actually been less than the same month of the previous year. So that indicates that the previous sales may have been elevated and more robust because of the homebuyer tax credit. Now, when you look at median home prices, actually they're trending about the same. Compared to the same 12-month period a year ago, they're virtually unchanged. And when you look at the home prices, they do have some seasonal variability from month to month at different times of the year. Even given that, they have remained relatively steady and have actually been trending minimally upward if you look at the last couple of months. Now, this may be a result of some of the more expensive properties and some of the higher price ranges that have been much more slower to sell have started moving here recently compared to lower price properties that were spurred by the tax credit. Now, when you look at inventory, there's a couple of things to look at. Just in pure inventory numbers themselves, the inventory continues to be an upward trend. The available inventory for August was virtually unchanged from July. Really see minimal change there. And if you compare to the same 12-month period a year ago, the inventory of available homes has increased. So when you look at the two charts there, you'll see that our inventory is above the same months more recently of the last 12 months. Now, again, prior to April of 2010, the current month's inventory had been staying relatively unchanged compared to the same months the previous year. But since April, again, since the tax credit ended, you'll see that the available properties have been trending higher than the same months during the previous year. Now, the last thing to look at from terms of inventory is the months of inventory. And this is still also trending a little upwards. And this is a good barometer that tells us what kind of marketplace we're in at the time. The months of inventory really indicates the absorption rate of homes based on the current sales rate. So it tells us at the current sales rate, how many months is it going to take to get rid of all the inventory. And again, that gives us a barometer of how things are going. And essentially, the most current months of inventory is a little above 13 months, which is a result of both the fact that the inventory really hasn't dropped, but the monthly sales have slowed a bit. Now, the absorption rates above 6 months typically indicate a buyer's market where there's more homes available than there are buyers, and a number below 6 usually indicates a seller's market where the demand for homes is greater than the supply. And as a general rule, if all the other parameters are equal, home prices will generally trend lower in a buyer market and higher in seller markets. Now, just to kind of summarize where we're at through August, it's currently considered a buyer's market. We've got more inventory than we do demand, with the months of inventory being a little over 13. Inventories are up. Home sales are not selling at as fast a pace in the recent months as they were in the same months last year. So we're beginning to slow a little bit from what we saw same time last year. Now, the good news, despite the higher inventory and the less robust sales, median prices have continued to trend pretty steady and have actually been going up a little bit here in the last couple of months. Now, the low interest rates are giving us some momentum for the buyers, but we also have to take into consideration that's tempered by more rigorous qualifying guidelines that are out there and a slower overall economy that's still sluggish because of our higher levels of unemployment. So bottom line, we expect more of the same performance, more or less, until the job growth is more robust and our unemployment levels begin to drop. With historically low rates, though, there's plenty of inventory. This is an excellent time for buyers to make their move. Whether you're a new buyer, whether you're moving up or downsizing, you won't find better values in the market than what you'll find today. So for more information, give us a call or visit us online at spotlightteam.com. Thanks for watching. Have a great day. See ya.